The Naira lost value for a further 162.5060 Naira to the dollar. And of course, the outlook remains quite cloudy here in terms of our markets. The all-share index slid a further 1.26%. But let's take a look at other markets, our fixed income markets. We do know that the federal government's bi-monthly T-bill auction was on Wednesday. So let's cross to Stanbic IBTC's trading floor to talk to Steve Osho, a fixed income trader at the bank. How are you doing this morning, Stephen?
I'm fine. Morning, Uche.
Now, we know the T-bill auction on Wednesday. We saw the federal government issue 137.97 billion Naira in T-bills at their bi-monthly T-bill auction. What were the results of this auction? And for you, Steve, what were some of the key takeaways of this?
Sorry, I didn't get that question.
At the T-bill auction on Wednesday, we saw the federal government issue 137.97 billion Naira in T-bills. Now, what were the results of this auction, Steve, and of course some key takeaways?
Okay, at the auction we saw the 91 days printed at 14.1, actually higher than the last rate, which printed at 13.5. And we saw the 182 day printed at 14.94. It ticked higher too from the 14.14 saw at the last auction. And we saw the 1 year moved an average of 100 basis points to print at 15.699 at the auction. All amount that was put on offer was sold, 137 billion, like you said earlier, and we saw subscription, each subscription across the curve too, mostly on the 1 year. We saw an average of about 106 to 107 billion in total subscription in that part of the curve, but they only sold 60 billion at that rate. But what happened at the auction was that we saw a lot of interest, but in terms of the returns that people were expecting, it was actually gapped higher. That actually explained the reason why we saw the auction came at those high levels.
Now, Steve, I'd like to get some clarity. Some analysts are saying that a combination of the MPC's decision to hold the rate at 12%, the inflow from matured securities and demand pressure, we're now seeing an increase in bond prices across all maturities. But actually what traders are saying every day is that yields continue to rise up. What is your take on this opinion?
Well, it's not actually an increase in prices. It's actually been, the price has been crashing because of the inverse relationship between the price and the yield. We've seen the yield going higher or ticking higher in this secondary market. We're still expecting the auction on bonds to take place in the next 1-2 weeks. But from the feelers we're getting in the secondary market now, coupled with what is happening in T-bills, we've seen the T-bill yield curve actually move an average about 40 to 50 basis points across the curve. And we've seen that reaction on the short end of the curve too, on bonds. We've seen an average of 30 to 40 basis point movement higher on the short end, while from the belly of the curve to the long end has seen an average of 25 to 30 basis point movement higher too. So I think generally the risky, there's risk aversion on security generally, and I think we've seen a slowdown of interest across the curve from both locals and offshore investors.
Well, Steve, then why am I hearing the reports this morning? I'm hearing some speculation that traders are anticipating a reversal in policy direction. Of course, this would be at an possible emergency meeting scheduled next month by monetary policy authorities. What is your take on a possible reversal in policy direction?
When you say policy, when you're talking about policy reversal, are you talking about a drop in MPR or a hike in MPR? A
possible drop in MPR, actually, because they're saying actually we saw a further liquidity tightening by the CBN at the OMO last week, and because some of the high rates submitted and the consequential low allotment levels, it sort of gives an atmosphere for a reversal in policy direction.
Well, I think it's still going to be very premature to judge at this level to say there's going to be a policy reversal at the next MPC auction, MPC meeting. If you look at what is happening on the exchange, there has been a lot of pressure on the currency. And if you look at the previous statistics of how FPC have actually reacted to these, you wouldn't say there will be a reversal. And we expect inflation to actually still tick higher between now and July. So in terms of a drop in MPR, I'm not too sure that's the direction to follow right now. But everything being equal, we still need to wait till that decision is taken in the next few weeks.